Can you retire using life insurance with a trust? Yes. Let me show you how. So yes, absolutely. Cash value life insurance can be a very powerful tool and also a flexible tool in retirement planning, especially for high income earners, including business owners as well. And here are some real world examples of different strategies that they can use to turn their life insurance policy into a retirement asset. Number one, tax-free income. Now I have in a asterisk right here, I put an asterisk right here to remind me about trust. Now, tax-free income usually means on the distribution side. So let's look at this example where a 60-year-old executive has built up 600,000 in cash balance for life policy. So instead of withdrawing from a taxable retirement account during a market downturn, what the executive does is she borrows 30,000 annually from her policy. What this does is it withdraws from the death benefit, and it's no credit check needed, no issue on her social security statement or nothing like that, no impact on her social security taxation either. The no tax on loans and preserves other assets during market volatility. So no one's checking what her W two is, no one's checking what her credit report is. She's borrowing the money from herself, pretty much. Now, she's just receiving money tax free, but where the money could go in tax free as well. So what that means is most people are receiving their income from their retirement account from a W 2 or W 9 or what have you. However, if you are 1099, there is a way that you can start receiving money tax free because we know why it's important. Because we understand that taxes range from anywhere from about 20 to 60%, depending on your state and depending how much money you earn. And we understand that inflation is anywhere ranging from about 2.5% to some states 3%, stuff like that. So we understand that these two numbers, inflation and taxation, are one of the number one killers of your wealth. So what if you could eliminate or at least mitigate the amount of taxes that you pay before it even goes into your retirement account? That's where having a proper trust setup comes into place. So having a life insurance policy is good, but also having a life insurance policy inside of a trust even better. But moving forward, a 1035 exchange. A 1035 exchange into an annuity is more specific. A retiree, for example, with $200,000 in cash value, invest in an index universal life policy for one guaranteed income. What she do is she uses a 1035 exchange from her account into a fixed annuity. So what happens is no taxes are triggered, creates a predictable income stream, and can include inflation protection. So it doesn't matter which account it is, it's your Roth IRA or 401k, 403b, whatever retirement account is, a 1035 exchange in most cases can be triggered, to which can roll over the tax free and no tax can be triggered on the rollover. Number three, withdraw tax. Number three, withdraw tax free up to your basis. Example, a couple near retirement has paid 150,000 in premiums into their policy. They withdraw that amount tax free, fund early retirement before tapping into IRAs. No penalties like IRA withdrawals, keeps taxable income low, leaves death benefit intact unless the policy loan that you have has not have exceeded your withdrawal basis on your account. So you're still receiving the death benefit. Okay. Number four, convert to long-term care. A 65-year-old uses cash value of her policy to buy a hybrid long-term care plan, which covers future care costs tax-free. Any unused benefits goes to her heirs, avoids draining retirement savings, and also plan for medical expenses. Number five, a volatility buffer, especially against market downturns. A retiree with a diversified portfolio uses policy loans during the bear market, which means that the market is going down. Bear market instead of receiving or sustaining a stock loss. What it does is it helps maintain portfolio longevity, avoid sequence of returns risk, keeps retirement withdrawals stable. Okay. So what I just gave you was 5 ways, and there are plenty more that you can retire using life insurance. And I gave you a tip, put it inside of a trust to eliminate or at least mitigate taxes and inflation. So here are 5 different strategies that people can use to help themselves while they prepare for retirement. Take care.